What's up, fam? It's your boy. And you already know what time it is over here, man. You already know I'm going to talk to you about some of the hot option plays that we're in. But in today's video, I also want to talk to you about what the market has shown us as we had already expected. But before we jump all the way into all of that, man, I want to hit you with the comment of the day. Comment of the day comes from my man JR. He says, "Hey bro, doesn't matter if we don't have the same stock app to join the Discord. I have Robinhood, but I'm trying to see if I can use the same plays on there." This is a great question from JR. So check it. Let's just dive right into that. So it does not matter at all what app that you're using for holding your stocks. Because man, if you're rolling with me, you can have Robinhood, Webull, TD Ameritrade, or you can even have few like BlockFi, M1 Finance. Doesn't matter. All together, we're always going to be in on the same place. Some of the mechanics of the user interface that you're actually using may be a little bit different, but I also hold 3 as well. And I mean, I have 3 different stock portfolio accounts with 3 different companies. So this way it gives me the leverage and the diversification to keep certain things separate, where I got my short-term plays, my long-term plays, and even where I focus my option plays at as well. So it's always better to have more than one, because if you want to buy something on the over-the-counter market, you're not going to be able to buy that with Robinhood, and you're not going to be able to buy that with Webull. But when you one of those public accounts like Fidelity or TD Ameritrade or E-Trade, you're able to purchase over-the-counter plays just as much. And sometimes you need that leverage to actually be able to get into some of these plays. So, hey, to me, it does not even matter. And man, if you want to join the Discord, fam, we're going to welcome you with open arms over there. So go ahead and use that first link down below to get into the Patreon, to get into my Discord. And man, I'll see you over there. And let's get this thing popping, baby. So let's talk about the portfolio all together today. The market was on a downtrend, was very red today, but we already should have expected this, because I talked to you about this last week, where we seen that the market was already starting to trend down. And this is why I was already explaining in my last few videos to start preparing yourself to start entering puts versus call options, or maybe just selling out of the market, standing back, watching how it unfolds, and then finding your opportunity to pounce when Wall Street bounce. And that's what we need to be doing today. And this is just one of those things I want to recap with you, because if you don't understand that you got to hold steady in some of your plays, this is going to get you to be panicked. And this is why you need to understand that the place that you're in and see red days like this as a buying opportunity. Remember, if you've been looking at these videos and you've been checking me out for the longest, you've seen that my portfolio is shrinking, is getting damn near close to being back even. And now you see that it has already ballooned back up to being down almost 20% once again. But that's fine, not even worried about this, because I always tell you there's a momentum play coming, and we see a shift that's starting to happen in the market, and that's going to be in around the September to October time frame. From my belief of what I've seen, that this downtrend in the deflation talk is starting to take more and more opportunity to be talked about in the market. Because what we seen today was the CPI data. For those who don't understand, that's to talk about the rates for what's going on with inflation. We always wanted, the headline is always going to be what the overarching number is at this point in time. Because at the time of the pandemic, this time last year, we were seeing that the market was not elevated to the levels that it needed to be at, that most of the economy was closed, most of the country was closed, most of the global scale things that needed to be happening on the global scale was not happening. And now all those things have opened back up, and so some of the prices are going to be a little bit higher right now, but we're starting to see that they're starting to merge back down to even. Some sectors are going to be a little bit higher. If you check out the CPI data, you'll see that used cars, new cars are up in a bigger percentage of time right now, and they're actually starting to be over month actually higher than expected. But you got to expect that sometime all goods are going to start coming back down to their normal range level, giving us an opportunity to take away from the market where all this attention is at, and actually start to turn our focus back to some of the undervalued, highly priced to earning ratio stocks that we need to be in. So this is what my game plan continues to be, is to, one, train the mind to get out of the opportunity of thinking about getting into call options this week, and then next week start rolling into the puts and taking advantage of what the market presents itself. There will be opportunities in the market to still take advantage of calls, but we want to start transitioning and paying a lot more attention to what puts are, or sometimes just staying easy and only being in 1 or 2 plays versus being spread thin and being in 6 to 7 plays just in case this market decides to be in a return to profitability and a return to post-trade on a bullish trend. So we always want to be ready to pounce. Once again, like when I tell you when Wall Street bounced. So that's just to jump into some of the plays that I'm looking at right now that I'm in, and some of the plays that I'm watching to see if that green is coming back. But let's talk about it. So the first one that I talked to you about this morning was Norwegian Cruise Line. I talked about the $25 put, and I put you in the play if you've been with me, and we already talked about this. And man, if you're checking out the portfolio, you'll see that Norwegian Cruise Line $25 put that I jumped in this morning, or yesterday afternoon, I'm sorry, it's actually up 33% at the time of this recording. Now, I still believe that the travel sector is overvalued, and we're gonna get this information. I can talk to them blue in the face, but I already gave you a video talking about it 2 times now, how Delta Airlines is gonna be the first travel industry company to come up this week in earnings that we're going to hear this information come from, and we need to be prepared to understand how that's going to play out for us in the travel sector. Once again, go back to the play that I put you in last week when we talked about Uber and how Uber was not going to be able to exceed the $50 put that it's actually in right now, and that's still currently in the money and it's set to expire this week. And man, if you're still holding that call, hey, get ready to consider that theta decay is about to start eating that contract up starting tomorrow. So you may want to start transitioning out of that play and get ready for a new play, because pigs get slaughtered, okay? So let's talk about this from another angle. What's the plays that I'm looking at that I'm still holding in the portfolio that I'm looking to see actually bring back value to me? And those are always going to be the main option plays that I'm in currently right now. And that first one is going to be a NEO option call for 19 November 2021. Currently see us down 10% on this play. And then you'll see I have another one for an $80 call for 18 March 2022. And I'm currently down 53% on this play currently. But I'm not worried about none of the NEO calls right now, because NEO is actually taking the stance of actually powering back up into the economy and actually powering back up the stock market. And there's a lot of money flowing in and out of NEO, and you got to pay attention to this because the volume is steadily increasing with NEO overall. Next one that I want to talk to you about, CCIV. This is for 15 October 2021. And man, we have another opportunity with Lucid Motors and CCIV looking to custom make their deal in September, where this catalyst may take off and help us actually get over the hump, pushing into the call, into the money, and actually getting this green actually coming out of this play. Currently only sitting down 26% on the day for this play, okay? And then let's talk about another one here, Marathon Digital Holdings. Crypto is the hedge against inflation, and the miners are the hedge against crypto, because if you're invested with the miners, you're already giving yourself a hedge with being involved in crypto by sympathy alone. And when crypto takes off, this stock is going to take off. So I'm not even worried about Maritime Digital Holdings right now. If this thing does not start to pop off in sometime in August, I will look to transition out of the play, roll it back a couple months, and try again, because always you got to preserve the capital and understand the play that you're in and see if you can shift the momentum into your favor, okay? Now, the next one that we got is AI, and I have a call on this for 21 January 2022, and it's an $80 call. It's down 47% currently right now, but I see AI as being one of these plays that potentially, I'm going to continue to own the shares, but I may roll this call back depending on what happens going into next month, into about the September time frame, where I actually see what's the shift in the tech sector. If there's not a shift, the theta decay may start eating away at this play at that point in time, and this may be an opportunity for me to think about preserving the capital, roll it back, and probably go a little further out than my NEO original call option for the $80 mark as well. Fam, this is all the call options that I'm planning to be in for a while, and I may even pick up one of these Tuesdays here in the weekly option plays with the Patreon fam over in Discord, where we talk about all these things. And man, that's what I plan on doing for you and keeping the game locked up on you. Now let's just talk about AMC just for a second before I get up out of here. When we talk about AMC, Panic is not going to be your friend. FUD is not your friend. For those who don't understand, that's fear, uncertainty, and doubt. And I don't want you to get to this point where you're starting to panic. Remember, it's your money. You control your future when it comes to your destination or how you do with your money. So this is never financial advice, but I want you to understand, take advantage of understanding this is a time to be buying on discount if you have the opportunity and the funds to actually make that happen. Don't go into the bag that you don't want to hold steady with that may make you panic and make you sell at a lower cost basis than you actually need to. Fam, this is one of those things and strategies that you need to implement to understand that there's a lot of manipulation in this market. We can always point the finger at the hedge funds, but at the end of the day, if you're a part of what's going on and you're trying to see a movement take place and you're looking to be a part of the movement, you got to understand you got to be in a position the best way possible for yourself first. And then you gotta live every day grinding, and you're gonna achieve crushing yesterday. That's the play out for me, baby, and that's what we're gonna do over here. So it's been your boy Craig. If you wanna follow me, definitely subscribe to the channel. Don't forget to bang that notification bell, and definitely like this video as well if you found value in it. And don't forget to check out the hot option video that I'll leave linked down below for you, and I even leave the card up for you as well. Hey, I'll catch you in the next video. Y'all stay safe. Peace.